The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at learngrowinvestconference.com.
Hello, and it's good to see you. Good night for those who are joining us live. All right, so today we're actually going to do something a little bit different. I wanted to talk about, just a little background for why we're doing this topic this evening. So I recently launched a one-to-one coaching program. And so I've started to work with persons who are seeking to grow and build their investments, who want to be better at the process, and who want to, be able to accelerate their goals. And so, I started to think about, okay, what would this entire process look like? And then I started to think about my own journey in terms of investing, wealth creation, etc. And then I realized that there's actually a common thread, for lack of a better term, in terms of what we focus on as Learn, Grow, Invest. Because for the last few years, we've been giving you a lot of information about investing and investing in stocks, how to maximize that. We do a lot of stock market content, and I'm realizing that's a limited piece of the wealth creation process, right? And so that's actually why we started our conference that we've been doing for the last few years. I'll talk about that a little later. But our conference is heavily focused on entrepreneurship. And so we have this piece of us that focuses on entrepreneurship. We have this piece that focuses on investing. And the two actually complement each other a lot. And it's also what we've been doing personally, as in my co-founder and I. And so we have been doing the two, and yet we have not been speaking about the two with you, our audience. So I thought I'd just do a brief presentation. It's not really slide heavy, but it will help just kind of land the main points that I have for each slide. So it's going to be a short one, but one that I think will help you as you, if you're thinking about starting a business and if you wanted to understand investing at a high level, right? So those three things, if that sounds like what you're interested in, then for sure you want to continue watching the video. And then of course, near the end, I'll talk about how our conference kind of brings everything together. So of course, stick around for that as well. We do have early bird tickets out for our conference now, so be sure to get those if you're interested. Early bird closes very soon, right? Closes this month. So be sure to get the tickets while they're at their lowest price. And so yeah, let's get started here. So we're going to be talking about keys to wealth building, and specifically two things, right? I'm just going to give that away at the start. We're going to talk about investing, and then we're going to talk about entrepreneurship. I'm going to talk about them separately, but then also how they come together, right? So I wanted to just do a poll here quickly. I know that a lot of our audience is investors, but a few of you, I think, because when we did our poll as well, in terms of what you're interested in recently, a lot of persons said over the next 3 to 5 years, they intend to start a business. So that was very nice to see, because that's where we're headed, right? We're going to be doing a lot more content related to entrepreneurship, because as I said, that's a big piece of what we need to do in terms of building wealth, right? It's not just, we can't just use, investing as to build the type of wealth that we want. No, investing is a very underestimated thing, right? And I'll certainly talk about that. But also entrepreneurship is also underestimated and its power. And a lot of entrepreneurs actually have challenges when they're just starting, etc. But if you can find a way to have the two working together, then it can be great, right? So let me just bring up my slide here. So yeah, let's go here. I'm just trying to make it right. Before I go any further, just in case you're new, I wanted to invite you to join our investment community on Telegram. Now we have groups that, as you can see on the screen, we talk about the US market, we talk about general topics relating to money, investing, if there's anything locally that we feel like sharing, we do that. There's an entrepreneurship group as well. So from time to time, persons will say, hey, is anybody interested in this product or service that I'm offering? They'll share links. If anybody's running any sort of promotion or special or event, you're welcome to post it there. And what we try to do is cover, all the things that we think are relevant for our community to continue, sharing ideas and helping each other to build wealth, right? That's what it's for. And of course, the next thing I wanted to let you know is our investment challenge that's still going on. We're 3 months left in this 12-month challenge, but that doesn't mean you can't still join, right? It's $30 a month, and you would have access to all of the videos that we've done for each month, all the challenges, all the uploads, etc. When you do join the challenge, you actually benefit from a one-on-one with me. I go over how to set goals for your investments. We'll look at your portfolio, your net worth, and we set some goals for the time that you'll be in the challenge for. So I think if you wanted to do like a 3-month sprint, you could very well do that. Join it now, and you'll be able to maximize on the next 3 months, because we're not going to do 1 year for next year. We're going to be doing it in shorter stints. And so if you wanted to catch all of the content, now is the time to join it, because you're not going to get these 12 videos in the same way moving forward. I'll just say that, right? Hi, Laurie's life. I haven't seen it in a while. That's true. I haven't seen you in a minute, right? But thanks for being here. So this is what we're going to talk about, why investing is important. So just in case you have never invested before, I'll touch on that briefly. I will take for granted, though, that most of the persons watching this are familiar with that. Then I'll talk about entrepreneurship, which may be new for a few of you, how they work together, how I think that you can have them working seamlessly together. And then I'll issue you a special challenge, right? And I'll encourage you, if you participate in the challenge, then I want you to reach out to me on LinkedIn, Instagram, wherever. And I want you to DM me whatever. I'm not going to give away the challenge now, but I'll issue the challenge and I'll look out for the DMs. And, I hope to hear from a lot of you. All right. All right. So let's get started with it. So I'm going to talk about why investing is important, and you'll hear a bit about, I guess, the Learn, Grow, Invest story as we go through. Because as I said, we've kind of been combining both. Because you may also know as well that we started a company called Learn, Grow, Invest Limited that helps companies with investor relations. We do training and media. So we started a company as well, but investing was where we started, right? Our personal journey is one that we were in debt. We started investing. Well, we started to work on clearing our debt, and then we started investing because when we tried to look at how long it would take to clear our debt, it would take too long. I was like, this is going to take forever. And then I started to see the power of investing. And so I started to focus actually more on investing than clearing the debt. And we're able to clear the debt that much faster because we were generating so much profits from our investments. So let's get started here, right? So investing, just in case you wanna, again, I'm just giving you the real heart of it right at the start. This works. Investing works well because of the power of compounding. And let me explain that in a simple way for you. So investing will work because if you have the right investments, if you use the right strategies, you have the benefit of what's called compounding. Now, the simple way to look at it is when you make money on your original investment, and then you make more, and then you make more. So it keeps growing onto itself is a simple way to look at compounding. It's why it's such a powerful thing, and it's also why you don't have to start with a lot of money, because you can really turn a small amount of capital into something meaningful, which is again what we have experienced when we started investing. We pretty much used all of our savings at the time, and we made an investment and we were able to grow that, and then we took that money again, we invested it, and then we're able to grow that, and we took that money, we invested it again. So we're literally compounding our money very quickly over a very short period. And then it took us 18 months to clear our debts, and we were able to purchase a home, to purchase an investment property, to later sell that investment property, to invest in stocks, to having businesses, etc. And that is just what investing has allowed us to do. So Tavares, can you rephrase the question? Are you asking me what we did to invest? Because how we started, I'll actually share that in detail later on, but what we did to overcome our debt and to grow our wealth to where it is today. What we did was we started investing in stocks. We made most of our money in the stock market. And we took that capital that we were able to make from investing in stocks, and we put it in other ventures, right? We've invested in real estate. We've invested in the US market as well. We've invested in companies. We started a company with the proceeds of our stock market profits. So everything kind of started with the very first step for us, which was investing in stocks, right? So that's where we started. Everything that we've been able to attain so far started with that initial investment, and everything has grown from there, right? I did share a full detail of my investment strategy in our investment challenge series on day 4, right? So I see your next question here, and I'm grateful for the questions, by the way. Keep them coming if you have them. So in terms of which investment I've gotten the most return from, it's, if you're asking which vehicle I've gotten the most return from, meaning which asset class, is that what you're asking? Please clarify, and I'd be more than willing to answer it. Just confirm that and let me know. All right, let me move on in the meantime. All right, so the stock market, as I've been talking about. Okay, so the asset class I've gotten the most return from is stocks, right? But we have since done a private equity investment. Of course, that's a long-term investment. We've invested in real estate, but the most money we've made is in the stock market, right? Thinking about our net worth now, close to half of it is through stocks, right? So stock market is where we've made most of our wealth from, but we're also now building wealth through entrepreneurship, right? And that's why, again, we're trying to pair the two together for you and show you what we've been able to figure out in terms of how that works. So the stock market is what we recommend that everybody starts with, only because the barrier of entry is low, right? So for those of you who are starting with low capital, right, maybe maybe you're trying to clear debt, maybe you want to invest but you don't want to risk a large amount of money. The stock market allows you to literally start with anything you have, anything that you can find to invest, you can start with. That's the beauty of it. In the US market, you can do fractional shares. So you don't even have to buy one whole share. You can buy 0.1, or you can buy anything that you can afford. So the stock market, for me and for a lot of people, the stock market has been key for them in terms of building wealth. So it's where I recommend you start. Now, this topic of investing, you can really choose any type of investment. As stocks, I think, is just where my expertise lies, and so I'm not speaking against any other type of investment. But so let me just answer Tavares, because I appreciate the questions, as I said before. So Tavares, we did go all into stocks, right? We didn't start to go into other vehicles until we had accumulated a certain amount, right? So we did go all in. That was our approach. We went all in, and then when we started to be able to generate positive cash flow, then we were able to look at other things, right? So but for sure, I do believe that once you've done your research and you're sure of, well, you're confident in your investment, then I like to say double down, right? So here are some investment tips, and certainly I've seen this from all the persons I've worked with. A lot of persons have this big barrier in their mind in terms of what investing is or what it shouldn't be. But start early and start small. And when I say early, it doesn't mean young. Start right away. So I work with clients from the ages of 23 all the way to 60, right? I have clients who are 60 years old, who are saving and investing for retirement, who are looking forward to, having their portfolio grow to a certain size to be able to live off of, and so on. So start early, meaning start as soon as possible, and start small, meaning just get some skin in the game, as they say. Two main ways that you want to earn here or focus on. Income. Now, income is important if it is that you have a situation where you're not generating positive cash flow through your 9-to-5 income or through your business income, right? So let's say that I'm starting to invest, but I have some debt, or I have a situation where my income is unpredictable. Then I'm investing mainly focused on income generation. That could look like dividends. That could look like maybe a rental property. If it is that, let's say I have enough to pay for a property as an investment, you want to ensure that you're generating positive cash flow from that investment. And the next side of it, now, if you do have positive cash flow from your 9-to-5 salary and you can wait a little longer, then you can focus on capital appreciation. That means you're thinking about, let's say, at least, I would say 12 months or longer to get to see that investment grow, right? And right now is an amazing time to actually start investing. It's an amazing time because, especially for the stock market, asset prices are very low, right? Very low. So it's a great time to invest because a lot of companies aren't trading at what I call their fair value. Okay. Let me get some questions in again. So did I use leverage? Yes, I did. I use leverage a lot, but you want to use leverage only if you understand it, right? The last time I used leverage was right before the pandemic, and actually closed out all my leverage by the end of 2020. I haven't used it since because I saw the rates going up, and because when the pandemic happened, our cash flow was actually impacted. So we had a business that we were running at the time, and the risk profile for it started to change. So we were worried that our clients would not be able to do business with us in the same way. So because our cash flow was impacted, we decided to close out all our margin. We had margin at the time at multiple brokers, and we just decided to close it out because we didn't want to have a situation where we're paying those margin interest payments and it was impacting our returns from our investments. All right, so let me answer. I'm actually enjoying this. Let me just focus on the questions for a little bit here, since they're coming in like this, right? So Lori is asking, what is leverage? So thank you, Tavares, for the question. So leverage is when you get a loan from your broker to invest, right? In Jamaica, we call it margin. So you can get a margin loan. Now, I haven't taken one in a while, so I don't know if the process has changed. But back then, all you needed to, let's say you had a portfolio of $100,000 and your broker gave you margin of 40% the value of your portfolio, then you would essentially get a $40,000 loan from your broker. You use that $40,000 to purchase stocks. And what they would do, some of them, is charge you interest on that margin monthly. So let's say the interest on the margin was 12% a year. That's a simple way to calculate it. You'd pay 1% on that 40,000 every month until you clear the margin, or until they do a margin call, which is when they sell your purchased assets at market price to be able to recover their money. So if you experience a margin call, what the broker might be saying at the time is that they don't think that you're going to be able to repay that money. And so since they have access to your portfolio, a part of the thing you sign to is that they can sell it if they choose to recover their money, and you have no control over the price that they choose to sell it at if they do a margin call. Now, usually if the broker has a relationship with you, they'll give you a call and say, hey, Jermaine, you need to pay us the money that you owe on the margin by, the end of this month, or we're going to sell them. Usually get a heads up like that if you have a relationship. If you don't, then you may just check your account one day and you would not have your stuff anymore, right? Let me see. Humble Boss is asking, suppose 12 months pass and no movement on the stock you invested in. So the thing is, you should actually be assessing your investments a little bit more frequently than that. I say at least once per quarter. But if it's very unlikely that you have 12 months and no movement, maybe you mean no movement that you want, meaning it might go up, down, and maybe the 12-month mark, you check it, it's back where it was 12 months ago. I wouldn't worry about that, because if you did your research and your thesis is correct, then I wouldn't worry. You're also asking if I use all my savings in the stock market, no emergency fund. So I'm going to be honest. When we just started investing, I invested all of our savings. Every single dollar that we had saved, I put it in the market. Now, I would not advise you to do that today, just because of the state of the economy that we're in. Meaning, with interest rates, they're trending down now, but there's a lot of uncertainty still. I wouldn't clean out my savings unless I had, again, positive cash flow. That's very important, Humble Boss. Positive cash flow. If you have that, then you can look at it as a temporary clearing of your savings to invest. Because if you have positive cash flow every month, let's say I have 200,000 saved and I invest that 200,000 now, but I'm generating positive cash flow of $50,000 every 30 days from my salary. Then in 30 days, I have $50,000 saved again. So I have built back 25% of my emergency fund already. Hope that makes sense. Lady Maxine, you can start with less than $5,000 actually, right? So 5,000 Jamaican dollars is a good start. So you can start with anything. All right. Lori, I see what you're saying. So what are you saying, Lori? $200,000 would be a dream for you? that takes me back because I remember. So Lady Maxine, if you're in the US, you can open an Interactive Brokers account. I would say, could I fund that account? I don't think there's any limit. So Lady Maxine, use Interactive Brokers. Send me a DM and I can send you my referral code and start an Interactive Brokers account. I believe you can fund it with any amount, but I started mine with 100 US, right? So you can start very small. So Lori, I wanted to click on this comment here, and I'm wondering if I'm going to be able to complete the stream. I really like the questions though. I'm wondering if I should turn this into a Q&A. I don't know, but go ahead and ask me your questions as you have them. I'll answer as much as I can. So $200,000 for me. I remember when I just started earning a regular salary because I had a company for a long time. And when I first started an internship, I didn't even have a full-time job. When I started an internship, my salary was $70,000 a month. $70,000, Lori, 70,000 Jamaican dollars a month. And when I finished all of my expenses, I had a $40,000 credit card that was in arrears that I had to clear off at the time. And so I remember the first month I got my salary, I paid my tithe, so I paid my 10%, and I just had that money sitting there because I didn't have any, that was after I cleared off the credit card. I didn't have any debt, and I was able to save, I think, 30 or 40,000 out of that salary. Then the next month came and I saved again, and the next month came. And so over a while, I started to build up money in my savings account. And I remember with the first month, I had $200,000 in it. And I was like, I said to my wife, we don't have any more bills to pay. This is a strange feeling. I had $200,000 in my account. So it's possible to get there. So if things aren't at that point for you right now, I'd recommend entrepreneurship and you can get there for sure. All right, so Darian, I don't want to ignore your question, but I'm not doing stock analysis tonight. That's next week. So I'll take note of this question and I'll be sure to give you my thoughts on them for next week. So join me next week, please, and I'll share that. But I want to focus tonight on just investing as a general theme and entrepreneurship. So I'm not going to be answering any stock specific questions. All right. Maxine, what's the return on $100? I would say don't look at it that way, but instead you want to how you think about your returns, you're looking at it. So remember the very first slide I shared, and let me go back to it. The very first slide I shared is this, right? It speaks about compounding. So I want you to look at it this way. Think about your best investment opportunity that you can use to invest that $100 in. So let's say the best thing you can find gives you 20%. Then if that gives you 20%, you now have 120. Then you take that 120 and you say, okay, what's the best investment that I can find for this $120? Let's say you get 20% again. You now have $144. You have $144. That's 44% on your initial amount, right? And you go back and say, what's the best investment I can find for this $144? And so on and so forth. That's how I want you to think about it, because that's the real power of investing, right? You're not going to invest in one thing with $100 and leave it there forever. That's not the way I recommend that you invest, because especially if you're starting small, if you're only having $100 invested, you want to be thinking of how you can increase that. So remember my second slide, I said, think about income, right? So that's what I'd want you to do. So Georgette, can this live be shared? The live will remain. So just save this link on YouTube. I'll leave it up so that you can have your son watch it. Can interactive brokers work in the US, in the UK? Yes, it can. So just send me a DM. I'll send you the referral link. Right? Yes. So Laura, you have to have expectations before you go into any investment. That's certainly true. Humble boss saying I'm a serious risk taker. So I'm not as the same risk taker anymore because I'm married and I'm older and we have a son and we are planning to expand our family in the future. And so I can't take the same risk knowing that I have a mortgage and so on. All right. So you send the DM to Learn, Grow, Invest on any platforms or Jermaine McDonald on any platform. All right. So just find me on any platform, message me or message the Learn, Grow, Invest page. All right. Let me see. I'm going to take one more question. I see you guys talking to each other. So that's awesome. Okay, cool. So let me try and get through this. Okay, no, I didn't finish this. So the next point is balancing risk and reward. Let me explain that for you. Now, there are persons who are extremely risk averse, right? I met somebody once and I tell this story all the time. The person had about 2 million or 3 million saved. They had that in savings and they were only investing about $100,000. And I was out of my mind. Now, it's not my place to tell you how much to invest, but I would say that ratio, 100,000 invested, 2 million, 3 million in savings is not appropriate. To me, that you're not invested enough, right? He had a stable job. He had positive cash flow. And yet he was only invested $100,000 out of his almost $3 million saved. I didn't think that was enough exposure for him. I didn't think that was enough risk. For context, because it's all in context, by the way. He is a young person, not married, no children. You can take on more risk for that demographic, right? And at the same time, I know persons who take on too much risk. Sasi Tabar is saying that his risk tolerance is extremely high. Now, I believe that the best balance is to take, yes, Jermaine McDonald on any platform, on Instagram, or LinkedIn or Facebook, any one of them. So you want to have a balance. No, you don't have to be moderate, because at one point I was an aggressive investor. But what you want to do, and there's this slide that I share in my investment challenge group, and let me share with you guys something that I didn't plan to share, but I feel generous here. I'm going to share with you something that I share with our investment challenge group, right? So I'm going to drop it in now. Gonna drop it here. So it should be on the next slide. Let me see if that worked. Yes. Okay. So let me share this slide here. So the amount of risk that you should have, your risk profile, should be at the intersection of three things, right? Three things. Your risk willingness, so that's your default risk inclination, right? Some persons are just like, it's almost they're made for high risk, right? Then you have risk capacity, that speaks to the capital that you have. So in this case, the person had reasonable capital to start with. And then you have to think about your goal, because you can, if you come to me and you say, well, Jermaine, I have $50,000 and I want to be able to make $5 million in 3 years to be able to build a house. You're gonna have to take on a lot of risk to move, from $50,000 to 5 million, because that's 1,000% return, right? So you have to be very aggressive if you're trying to go from 50,000 to 5 million in a 3-year time span. Now, if you tell me you have $50,000 and you have a 30-year, then you can be as conservative as you want to be, right? So let me address the comments in the chat. So Lori is saying 100,000 is not investing enough. So thank you, Tavares, for explaining. It's context. It's the context that matters. He had $3 million in savings and only 100,000 invested. That's not a good balance. That's not enough exposure. Because, I mean, the truth is, we're all subjected to inflation right now. And so what that person didn't get is that 3 million in the bank right now can't buy $3 million worth of stuff 6 months from now, let alone a year from now. 5 years from now, if he had that $3 million still in the account, that would not be able to do anything meaningful for him. So it's the ratio of how much he had saved versus how much he's investing, because savings are giving you 0% return. If he put that $3 million in a dividend stock, or $1 million or 2 million, whatever would be reasonable for his risk profile, then he would be able to actually keep up with inflation for his savings, and then he wouldn't lose all of that value, right? So hopefully that makes sense. And yes, Tavares, you're capturing it perfectly. So there is a concept of not being adequately invested, right? So that's one of the things I'll go over with my clients in terms of our coaching, because you have to take the amount of risk based on these three things, as I mentioned, right? You can't isolate it, right? If you have small capital and big goals, you have to be willing to take more risk. If you have a lot of capital and you just want to maintain your wealth, you don't have to take as much risk, all right? So let me pause here. Are there any more investing questions before I get to entrepreneurship? I really love the engagement, by the way. It's more than I was expecting. So I really appreciate you guys for engaging and for being here on a Friday night, right? I'm gonna take a small break again. I'll be right back.
The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at learngrowinvestconference.com.
All right, so I'm gonna just briefly share some information about our conference before we talk about the entrepreneurship piece. So if you have questions, keep them coming. Lori, I see your question. I'm gonna answer it in a very short moment. So just 1 second here. All right, so so I see a message, Lori. Okay, so let's talk about the conference for a little bit. Let me share my screen. So this is our conference that's coming up. We're actually going to be bringing the two together. This is entrepreneurship and investing combined. So the persons you're seeing to the right of me and Renee are our keynote speakers, and I'm very excited to hear from them because I think their story is very interesting. I won't give it away, but they're authors of a book called Cashing Out, a book that our VIP ticket holders will be able to get a signed copy of. So Let me just share some information about the conference quickly, and then we'll get back into the rest of our video here. So it's November 29th and 30th at the Jamaica Pegasus Hotel. Now it is hybrid, so you can purchase online tickets if you're overseas. So like in your case, Lady Maxine, you can actually participate in the conference online if you're in the US. For someone who joined from the UK, you can join as well. For those who are in Jamaica and in Kingston or close to Kingston, you can be in the room, and you'll get value either way, right? So a couple of things we're focusing on for the conference. So we're bringing together the two things that we're talking about here tonight: investing and entrepreneurship. So we'll have topics on both. Our theme is focused on acceleration. So we want to take it to the next level. All right. So if you are already investing, we're going to share strategies for you to be able to accelerate your income and your profits as an investor. If you're an entrepreneur or thinking about starting a business, you're going to get strategies to for sales, for marketing, for content creation, for maximizing cash flow for your business. I'll be doing a topic on the numbers within your business, right? So topics like that are what we're gonna do. So tickets, as I said, early bird tickets are available right now. Early bird ends very soon, right? These prices that you're seeing here are early bird prices. So for example, Maxine, you would order the online ticket for $150. For those who want to be here in person, it's $300 US and $500 for VIP. It's a 2-day conference, right? So what you're seeing here is a price for 2 days, right? So if you cut the price in half, that's what you're paying per day. We've seen conferences charging more than this for a 3 to 4 hour conference, right? And this is not, anything to do with those other conferences, but we have a reputation as Learn, Grow, Invest for over delivering, for giving you more than what you pay for. And this is no different. I can tell you that one of the session on sales that we're going to have is worth more than the ticket prices that you're seeing here. So you're going to get 12 to 14 sessions, I believe, for this price. So just divide that by what you're seeing here by 12 to 14, and that's what you'd really be paying per session for this conference. And then, of course, if you are an entrepreneur already and you want to have a booth, we actually have booth spaces available here. Reach out to us and we share the information there. If you're interested in sponsoring, we're certainly open to hearing from you once your brand aligns with what we're trying to partner with, then you can certainly be a sponsor. And then, of course, this is our information on our keynote. If you play this video, you'll be able to hear from them. Hopefully we'll be able to have them on for an interview at a later date. And then, of course, if you wanted to purchase the recordings from our previous conference, you can certainly buy it here at a special price. Okay, so that's our conference. Let me take some questions and then we jump into the rest of the presentation here. All right, so I believe Lori had a question. Did being an aggressive investor work out for me at the time? And saying the live is informative. Yes, you need to get back into the game, right? I would say being an aggressive investor worked out for me while I was not a father, right? So I remember the day that I made a rash decision. A company that I had in my portfolio was doing really bad. I decided to sell it. I didn't really think about the decision. I just did it. And I realized about a $400,000 loss at the time. And, as very, distraught. I was questioning myself, but I just couldn't bear any more losses at the time. And I remember having a discussion with Renee about it. Renee is my wife, who is in the chat, and co-founder, CEO of L.E.A.R.N. Grow Invest. And she talked me through it. She told me, to trust in myself and my understanding of investing. And the investment that I made with the balance of that sale, we were able to grow that by about 400 or 500% over the next 12 to 18 months, right? So I can actually tell you what that investment was in. That was at the time when Fesco was just listed. So I put those funds that I had from selling that investment into Fesco when it was around $1.20, $1.40, thereabout. And if you remember, Fesco went as high as $8. I took most of my profit at $7.11, right? So being aggressive has its place, Lori, but it depends on your situation. If you don't have positive cash flow each month from your salary, you can't be as aggressive because you don't want to have a situation where you're ready for that capital or you need to pay a bill and you don't have it, right? Because aggression has consequences. So you want to just, your profile has to fit. So don't think of it as just that part. Think of the three things that I shared. Okay. So Lori also said, I need to step up my game in the money. So here's the thing. When I first went from, so that job that I have that was paying me 70,000 per month, when I got a full-time job, my salary increased 4 times. Was it 4 times? Yes, 4 times. And so now I had a different level of income than I had before. And I still didn't know what to, like, I hadn't had that much amount of money coming into my account each month. I didn't know what to do with it. So I had to shift my mindset now to be able to handle a different level of capital, a different level of income. So you want to step your game up, sure, but I'll just say to you, focus on the type of person you would need to be to handle that amount of money before you start earning it. Because if you don't think about the type of person that you need to be to handle that level of money, you can get it and it can go through your hands just as quickly. All right. Taking a couple more questions before I continue here. Jermaine, so I have a sum of money invested in the stock market and I've recently seen a very good real estate investment. Would I suggest liquidating the stock account to purchase? Give my insight, please. Now, Diplomat, it sounds like you need to book a one-on-one consultation with me. But I would say, not knowing your personal situation, I would say it depends on what the real estate investment is giving you. Is that real estate investment giving you positive cash flow? Does the real estate investment fit into your overall investment strategy? Meaning, investment is typically a long-term instrument, right? You're investing in real estate, you'll have costs, you'll have mortgage to pay, you'll have property taxes. If it's an apartment, you might have maintenance. So is the property investment, is it providing positive cash flow or will it go into your cash flow per month? Meaning, let's say your mortgage is 150,000, but you can only rent it for 120. You're paying $30,000 per month out of your salary to maintain that property, right? So you have negative cash flows on that real estate investment. If you can't afford that $30,000, if you can't afford to wait until the cash flow is positive, if you can't manage the costs associated with the real estate investment, then the short answer would be no, because if you don't have enough liquidity, then it may make sense to stay in the stock market a little longer. Then when you can find an investment property or the time that it will take you to gain positive cash flow, you're able to withstand, then it may make more sense. Again, not knowing your background, not knowing your income, not knowing the property or the value of it or any of those things. Those are my, just top of the head thoughts. Let me see if there are any other questions here. So Renee, my wife, co-founder and CEO of L.E.A.R.N Grow Invest, is here saying it worked out for us, right? So we took a lot of risk at the start. We were a little bit more conservative as we started to think about starting a family and doing those things, because I can tell you, diapers, school fee, books, those things take a lot of cash from you, right? So yeah. Wealth built slowly will last. I think that's Proverbs 13. Is that Proverbs 13:22? I think so. Ren, find the scripture for me. Okay. All right, guys. I really love the conversation tonight. So let's talk about entrepreneurship as a wealth generator. So before I get into this, let me explain what we did as Learn, Grow, Invest. So what we were able to do is, so as we had this community, Learn, Grow, Invest, we started to cover companies on the stock market where we're helping them in terms of, when IPOs come out, we're doing prospectus reviews. We're helping to educate the market about investment opportunities, etc., etc. And we started to see this glaring gap, right? At the time, the only persons in the space were Kalila Reynolds, who started taking stock, I think, a year before we came to the public as a community. And then at the time, we also knew about Stocks on the Rocks, which is Simon Johnson, which they would meet, I think, last Friday of every month, right? So those were the two other kind of financial educators that we knew about, right? And so we're doing this content, we're teaching people how to invest, and then we're looking at the market, we're looking at the reports that we're going through to analyze the companies, we're looking at what the US was doing in terms of their market, and we said, well, there is a gap that we see here, right? So we saw a gap for a couple of things. The first gap we saw was there was no systematic way to teach you watching this right now, how to invest. And so we wanted to create an opportunity to be able to do that, because at the time, all we did was content on YouTube. We didn't know what else to do. So we started Learn, Grow, Invest Limited with a focus on financial education. And at the time, we're working with a handful of companies to help them bring awareness and education to their investors. So the very first activity that we did at the time was, I think, the iCreate EGM that they had back in 2021 or 2022, I think, before all the things that happened with them last year. So they were actually our first client in terms of investor relations. And so we streamed that EGM that they had at the AC Marriott. We streamed it to this same channel that you're watching right now. And we're like, okay, this was cool. We're able to stream. This is something we know how to do. We did an interview after the EGM. And so we're like, well, let's see what other companies are interested in this. And so we were able to build out an investor relations arm of the business. And then we also thought, what about the companies who wanted to maybe engage their employees, build morale by, helping us, by having us help them to educate their employees. So we started to do workshops within companies to help teach their employees how to invest. And I'll tell you why this was important. When an employee is stressed financially, it impacts their productivity, it impacts their job satisfaction, because if you are not earning enough or you are not able to keep enough from your salary each month, you're likely going to find an additional stream of income. If you're finding an additional stream of income, then you're likely to be not giving your 9 to 5 your best, and so everything just becomes strained. So when we help companies to train their employees on financial education, financial literacy, it helps both the individual and the company. So we started to go into companies and teach them how to invest. And we found where we were able to help the companies manage their money, because one company said to us, Jermaine, our staff has a very high number of salary advances. So a lot of their employees were borrowing money from the company, borrowing money from their salary, and before they finish paying that off, they're borrowing again. So that was something that we're seeing in the companies that we're speaking with. So that provided an opportunity for us. And that's how Learn, Grow, Invest Limited was born. All right. So let's talk about what entrepreneurship does for you. So think about it as giving you control over your own income. Now, a lot of people say entrepreneurship gives you control over your time. I'm not so convinced with that one just yet. It depends on the state of your business, but entrepreneurship certainly gives you control over your income. And let me tell you what I mean here. If you find the right product, the right service, the right platform or system to deliver that product or service, then you can pretty much create a niche in the market and generate limitless income, right? So the first year that we started Learn, Grow, Invest, I made in just maybe the 4 or 5 months of that year, that because we registered in May, we started actively doing business like July, August. We made in those 4 or 5 months half our annual income, right? So in 4 months, we're making half of what we would make in the year working 9 to 5, right? The following year, we're able to make about 30% more than our combined salaries. That's for me and Renee in terms of revenues that we're generating. And so entrepreneurship has been able to help us to control how much we make, because when you own the company, you determine your salary, you determine how you price your products, you determine the clients that you're serving, you determine a lot of things. You have full control. Now, I say, as Tamara is saying, entrepreneurship comes with a lot of stress. But I'll tell you, there are business models that are limited in stress, right? And there are ways to go about it. Again, I'll plug the conference here. There are strategies that will show you that will help you to balance the two, right? Because the truth is, what creates the stress a lot of times in business are things like cash flow, are things like maybe not being able to manage things like your taxes. It's not knowing how to market. There are elements of the business that creates stress for you that companies like Learn, Grow, Invest can help you with, right? So it gives you control over your income in a way that you don't have with a 9 to 5, right? If whatever I'm earning from my 9 to 5 now, if I wanted to double that income next year, even if I got a promotion, I can't do that. If I wanted to double my income next year from my company, I can probably easier double my clients and then, focus my efforts there, my marketing, my strategies, etc. I can't do that with a 9 to 5, right? So Tavares says, as an employee, you go home. As an entrepreneur, your job is always with you. Again, it depends on what you're doing. It depends on what you're doing. This is not true of every job, right? There are systems that you can create. There are processes that you can. So right now, what I'm doing here on this platform, speaking to you, this is something that is fun for me to do. This is not work that I'm working right now, right? So there are parts of it that gives you autonomy, right? If you have autonomy, you have control over how much you earn. You have control over how much you work, right? Because entrepreneurship is not something that you're forced into, right? You have control, all right? So let me move to the next one, right? So what you want to get to is multiple streams of income in a way that they complement each other and they complement what you're naturally good at. And I cannot stress this point enough. Do not start a business in something that you are not graced for. As Irene is saying here, that being an entrepreneur requires a special grace. That is 100% true. So let's say that you start a business in an area only because you think it makes you a lot of money. You're not called to it, you don't have the special talents for it, or you can't find anyone to run it for you. That wouldn't lead that's not a recipe for success, right? So the Bible says, give portions to 7 or even to 8, for you do not know when disaster may overtake the land. So you want to invest, or you want to ensure that you have multiple income streams. It doesn't matter how much you earn, right? If you lose your income for whatever reason and you don't have an additional income stream, what do you do? Right? So multiple income streams are important. There are ways to automate it. There are ways to leverage it. I do not like the term passive income, but you can create systems to generate income for you. Again, those are things that we'll cover in detail at our conference, right? So as I was saying to Lori earlier, it requires a change of mindset, right? Mindset has to change when you're running a business. You have to think systems. Systems are important personally, but especially in a business, right? You have to price your goods and services correctly. You have to learn multiple skills, right? You have to be marketer, content creator, you have to be accountant, you have to be all of that stuff. But the values are tremendous as well, right? So I love this point, Tavares, and I'll tell you why I think you get the best of both, or you get the best in terms of wealth creation opportunity if you're able to do both. And that's because, remember, when you invest in the stock market, you're investing in a company, you're investing in an entrepreneur, you're investing in an idea. So the goal for us is to create the thing that others will want to invest in at one day. So I'm not saying we'll take investment, but we'll build Learn, Grow, Invest to such an attractive company that people will want to just give us their capital for us to grow even more. All right. And what you should know, remember I was saying the point earlier that growth potential, this should be growth, please forgive me, grow potential. Growth potential, that's not linear. So I remember my first company, and I should maybe tell this story one day, but the first company I had, we did sales of 300,000, then 1.2, then 20 million over a 3-year span, right? That's not linear growth, right? We went up 400% in sales that first year, and then we went up almost, what was that, more than 1,000% from the 1.2 million to 20 million. So that's why I'm saying it's not linear here. The amount of revenues you can generate from your company is limitless based on many factors. Now, what I did for that year, if you're interested, is, and Renee might remember this was the year that I decided that I'm going to take I would not say no to any customer. Not a good idea, by the way. But, persons, at the time that was a computer business, and I was selling laptops, computers, etc., at some ridiculously low margins, right? So I'd buy the goods in volume, I'd mark them up conservatively, think of like the Amazon model, and then I'd go to deliver them personally. So persons would be ordering computers in St. Mary, in Ocho Rios. I'm driving in my car, I had a little Swift at the time. I'm driving to them, delivering it, taking cash, coming back, and I had a target of $1 million in revenue per month was my target. So its target was 12 million, and we got to 20, right? So that sector business was computer sales and service. So I'm from a tech background, so it's not linear for business. That's the point I'm making here. So there's no limit again to the income that you can earn. You just have to have the right systems in place to generate that revenue. And of course, I learned later on that profits are more important than revenue, right? So even though we had that great revenue, the profitability was actually comparable for both years, which wasn't necessarily the best thing, but it helped us to grow our customer base, right? So what we needed to do was just figure out ways to continue earning. So whether that be, ink sales or stationery sales, because we also sold stationery, we're building up our database of clients. We had a good business, right? Final slide here. If you have not started a business yet, you're thinking about it, here are some tips to help you. And again, I'll say, if you really want to get off the ground and get started, the Grow Your Wealth Conference is where you want to be, because we're going to help you with all of this, right? So for those who can't think of a business idea, look at where you see gaps in value, right? Remember I told you that story where we were Learn, Grow, Invest. We're seeing we're covering, we're doing stock market content. We're seeing that there's a gap in the market, and the gap was so glaring to us. And so we found a way, to the second point, create a value proposition around that gap that pays us money, right? Because some people are solving problems at a loss or running their business at a loss. And I heard somebody say this earlier this year, that when you run your business at a loss, you're paying your customer to do business with you. And when you pay your customer to do business with you, it means you're pretty much, that's not an equal exchange in value, right? So you want to create a value proposition that pays, right? You don't have to. A lot of people think that they need to make a ridiculous amount of money. But think about it this way. If you are earning $3 million from your 9 to 5, and you can run a business that gives you $1.5 million in profit every year, then you have in that business 50% of your annual income from your 9 to 5. So what that means is that whatever you're, so imagine then if you also say, well, all the profit that I make from my business, I'm just going to invest. You're able to build wealth so much quicker, because you have a vehicle in your business generating positive cash flow that you don't have to pay yourself a salary from. So you don't have to worry about paying taxes in terms of salary to yourself, because you don't need to take a salary from the business. Then don't take it, just reinvest that money. And so you're able to grow the cash in that business, and you can actually do investing as a company. I hope you guys know that, right? The next thing that you want to do, of course, you want to build a business around the idea. When I say build a business, so that person who said it earlier, that, let me find it, Tavares, who said, as an employee, you go home. As an entrepreneur, your job is always with you. Build a business around it so that it's not always with you, right? That's the idea. You don't want to be self-employed. You want to be a business owner. You want to own a business. You want to have a process or a system where persons can pay you without you having to initiate the transaction all the time, right? The next thing that you want to do is keep expenses low and focus on cash, right? Most entrepreneurs don't pay themselves, right? Most entrepreneurs do not give themselves a salary when they're just starting out. So then that business is actually becoming a burden to them. Some entrepreneurs, and let me say this, and this is from my heart, and that's why I'm saying this. Imagine you running a business for 2 years, 3 years, 5 years, not getting a salary, and that business putting pressure on your 9 to 5 income, putting pressure on your spouse, putting pressure on your children, putting pressure on your health. That's not a recipe for success, right? So if you're not able to pay yourself, then there's a good chance that that business is in debt. If the business continues to accumulate in debt, then you are essentially, you're sabotaging your retirement, you're sabotaging your ability to generate wealth, and that business is now a parasite to your personal finances, all right? I hope you sense my heart in that, something I'm very passionate about. And the business idea has to make sense. Now, I'm not saying you can't have a season where things are difficult based on the economy, based on the market shifting. Those things happen, and being an entrepreneur is about pivoting. But you have to assess whether or not it's worth it. If you're really talented, go and find a job, work on the business model, work on your pricing, work on your distribution, and then do that in a way that it complements and not take away from your personal wealth. All right. And finally, you want to be, hold on, let me see if, okay, I have a couple of slides left. Okay. You want to reinvest profits. So again, if you have that business generating positive cash flow, or you have your investments generating positive cash flow, you can actually reinvest on both sides. You can use your investing proceeds to invest in your business, so you don't have to borrow money, so you don't have to take on equity. And if you're generating positive cash flow from your business, you can use that to invest in the stock market, generate revenue, generate income through dividends or cap gains, put that back in the business. So the business now becomes the holder of the investment that comes back to you, and they just feed each other, right? I hope you're understanding where I'm going with all of this. This is my last set of slides. Ask me any question that you want, and I'm going to issue the special challenge to those who stick around shortly. But we're almost done. All right. I'm checking on IG if they have any questions. I see Dark Chocolate saying very true. And I don't see any questions on Instagram, but if you have any questions, please do let me know. We're talking about entrepreneurship and investing and how the two work together. All right. So the first thing that you want to do is invest the business profits, as I was saying just now. So invest your profits from the stock market, invest your profits from the business, and you'll find, again, just the ability to compound your capital, compound your wealth very quickly. You want to diversify income streams for both, right? So when you start to accumulate cash in your investments, you can diversify. I don't recommend starting out diversified. You won't see anything meaningful, but once you start to grow and accumulate, then you can diversify. Same for your business. You have a product that you've mastered, you know how to deliver it, you found the right pricing, you found the right clients, then you can start to diversify. But if you try to do too much for your business too soon, you're not going to see anything meaningful. It's the same investment principle, right? If you diversify in your business too soon, they're going to stretch yourself too thin. All right, that's what we did for our first company. By the time we closed, we were selling and servicing computers. We were selling stationery. We were in surveillance cameras and equipment. We were doing networking. We were selling and servicing printers. What else did we do? We also sold computer furniture. So we used to sell desks that would go to your house, assemble that desk, and install it for you at some ridiculous cost. Like, we're basically doing it for free. What else did we do? We built websites. So we were doing 7 different businesses in one. It wasn't the wise thing to do because we were stretched in terms of resources. But if we focused on one, we built it up, then add additional products. The reason why franchises work, the reason why KFC works, the reason why those fast food places work, they have a set menu. They pretty much optimize the process of delivering that big deal or that meal deal or that zinger. That's all they focus on delivering. So all they do is optimize. They're not creating a new meal every 2 months. They have a set menu. Maybe for Easter or maybe for Christmas they have a special or a promotion, and that's it. But they sell one product. They're not trying to please everybody. They're trying to please the person who wants fried chicken, who want it in, I'd say, 5 to 10 minutes, and that's their target. They're not trying to serve the persons who want stew peas or who want oxtail. They're selling you a very specific product, and they focus their energy on distribution points. So they open as many restaurants as they can, and they focus on the delivery. All right. So next, the concept of reinvesting increases your returns, right? Remember I said it's not linear. So if you're able to have both generating positive cash flow, both income being reinvested, then your wealth is able to grow a lot faster. All right. And it's for us, certainly for Renee and myself, it's our long-term wealth strategy. So we are expecting that at some point we'll have Learn, Grow, Invest built up where we're not in the day-to-day anymore, where we've handed over to someone. We have our clients that are growing. We have our partnerships. We have our vendors that we work with. We're expecting that we can retire from 9 to 5 and maybe have work on different projects, travel the world, focus on our family time, spend time with our children and our grandchildren. But we want to ensure that we have investments, that we have businesses, that we have real estate that is able to provide us with income that we need to live the kind of lives that we want to live. And we want to spend more time giving back. That's our ultimate goal. That's why we're investing. And that's why we have a company. All right. So I really hope this was impactful for you. I'm going to close it out with some tips for combining both. Then I'll issue the special challenge, and then I'll take any questions. So if you have any questions, if you've been watching us from the start or you've been here for a while, we're talking about investing on entrepreneurship as the keys to wealth creation. Take a minute, like the video, subscribe to the channel if you haven't done so as yet. If you're watching on Instagram or LinkedIn, follow the pages there. Let's dive into the last one. So for both, so what I'm saying here applies to both of these now. For investing, for entrepreneurship, you want to focus on generating cash, right? At some point, even if you're investing for the long term, if you don't generate an adequate balance of cash, you're going to either be tempted not to invest anymore. You're going to start to question whether or not you're making the right decision, and you may either pull those investments or stop investing altogether. So it's important to generate cash on both sides, because if your business is causing stress, taking away cash from you, then you're not going to be encouraged to keep growing it either, right? So focus on cash generation. Think about scale. So I think about how I'm going to grow my investment portfolio. I think about where that portfolio needs to be 5 years from now, 10 years from now. I think about where my business is going to be 5 years from now, 10 years from now. So it's important to think about scale. The third point, watch expenses closely. This also applies to investing. The amount of fees you pay matters. What it costs you to liquidate the investment matters. If it's real estate, what it costs you to sell the property matters. All of those things you have to watch very closely, because that impacts your ultimate return on your investment, right? You pay a lot of fees in real estate. We sold our investment property, and the amount that we netted, if we did some things differently, we could have made almost $1 million or $2 million more on that transaction, right? I've already spoke about compounding and the benefits of it. You want it to work in your favor. And this is about managing debt as well. So you can use debt in investing. You can use debt for entrepreneurship. Manage that very closely. All right. I'm not going to say much on it here, but you want to take on debt sparingly in both cases. You want to think about the total cost of ownership, something again that we cover in our coaching program, and you want to really see whether or not you're actually building up your investments in a meaningful way. And finally, as a part of our L.E.A.R.N methodology, we have the N, which stands for Normalize Investing Regularly. So normalize entrepreneurship, normalize being an entrepreneur, normalize thinking like an entrepreneur, normalize being an investor, normalize thinking as an investor, and you'll really see the benefits of it. Because we invest, we're able to have a different standard of life than we started out with. We would not be able to do all the things we do right now if we weren't investing. I wouldn't want to imagine if we were just earning a salary, paying bills. We would not. I couldn't even do YouTube, honestly, because I wouldn't be able to afford it and probably have to be working right now, right? Okay, so I'll take some questions. I'm going to be live for just 10 more minutes. Okay, so Sanya from Million Dollar Woman that we did with Dollar Financial last year, really good to hear from you. Is investing in real estate a good idea? So I'm going to answer that this way. I'm pulling from our coaching program again. So in the coaching program, we teach you how to assess an investment opportunity. So I actually just alluded to it, Sanya, where you have to look at the total cost of ownership, but you also have to look at what's the return prospect on that real estate investment. Is it going to be generating positive cash flow for you? Is it going to cost you more cash than you have? Is it generating positive cash flow each month? If it's a property to live in, it's not an investment, it's not positive cash flow for you because the house that you live in won't generate cash for you. So all of those things matter as you assess whether or not investing in real estate is a good idea. So that is a perfect example of what we could talk about in a one-on-one consultation. Everything here, context is important. You have to ask yourself, what's my potential upside or ROI? You won't ultimately be able to predict it, but each asset class performs a certain way. Each asset class requires a certain amount of overhead. Each asset class has a sort of band in which you can expect to get returns from. All right. So thank you for all your questions. I don't see any more, but I will certainly try to answer what I can. Let me get into my personal challenge for you right now. All right, so let me type it up because I want to share it on the screen. I'll give you a final call for questions. So let me see here. So I'm calling this a special challenge. And if you're not seeing my screen, I'm not sharing it yet because I'm typing it. Okay. So you want to so I'm going to issue one challenge for, so depending on who you are, this is the challenge, and I'm sharing it now. So if you are an investor and you don't have a business, I'm challenging you to starting a business in the next 30 days, right? You're going to message me on the Learn, Grow, Invest profile or on my personal profile and tell me the business idea, how are you going to make money from it? And I want to see you do things like, creating the page on IG or any social media profile, coming up with your product, your service. You want to have a pricing for it. You don't have to have it all figured out in 30 days, but you need to know what you're selling, who you're selling it to, and you just need to get things started. And I'll tell you why. So we have, as a part of our conference, a pitch competition, right? That pitch competition will give you a prize of $300,000. Now, last year we made the pitch competition open to those who had been in business for a while, but who knows, we may open that to persons who are doing startups as well, and it could maybe serve as startup capital for you. You never know, right? So start a business in the next 30 days. And if you're already in business, you're watching this, you're an entrepreneur, and I see Colin in the chat. By the way, Colin, CH Gadgets, good friend of mine, he has a YouTube channel that does tech reviews. Check out his channel. He posts some great videos. So be sure to check that out, right? So in your case, Colin, you have a business already. I'm challenging you to start investing in the next 30 days, right? So you'll need a brokerage account, you need to fund that account, and you need to purchase an investment in the next 30 days. So both of these things you can do in a weekend. You can do in 3 days. So I'm giving you 30 full days, and we're actually going to be having a starting your business challenge where, just like we had an investment challenge where we walked you through how to invest, and we did it over 5 days, we're going to start a challenge dedicated to persons starting their own businesses. So, and we're going to do it in the next probably 2 to 3 weeks. So it will be within the 30 days to help you accomplish this goal as well. So I wouldn't give it a challenge and not help you to actually do the challenge, right? So hopefully that makes sense. So if you have not started investing already, I'm going to do, if you are on our mailing list, I would have sent an email recently where you can get access to our coaching program. If you need help to get started, you can reach out to me. We can do a one-on-one consultation, and I can show you how to get started. All right. So for both of these, you can get help, right? That's what we're here for. So Tavares, I figured you'd probably ask this, right? So for the person who does both, then I would say look for ways to see how we can maximize both by having them work together, right? If you're already doing that, then you're in a great position, and you just need to accelerate that as much as you can, and you're gravy. You're good. Edward F, today I got back in the stock market. Congratulations, right? Congratulations. Exactly, Colin. He needs to just 10x, right? So Tavares, Colin is challenging you to 10x both. 10x your investments, 10x your company. Lady Maxine is saying need that from you both. Yeah, so that's what we're here for. That's what we're here for. And I'm going to share the details on the I'm going to play the conference video again, but I just want to just encourage you to check out our conference, right? The Grow Your Wealth Conference is going to be, so a lot of what I discussed here tonight, think of that over 2 days. So I've been online for 90 minutes. You're going to get all of these gems and valuable information that I've been sharing from 20 different people over 2 days, right? So it's going to be more of the same. It's going to be great value. It's going to be things that can help you become better at both. If you're an investor, it will help you. If you're an entrepreneur, it will help you, right? So be sure to get your tickets as soon as you can. Early bird ends this month, and so these prices that you're seeing now will not be tomorrow's price. So buy your tickets as soon as possible. All right. So Tavares said they're actually working together on personal challenges about using leverage. Okay, so if you're not sure how to maximize leverage, again, I can talk to you about that on a one-on-one consultation. To book it, just go to our website. Once you pay for the consultation, we'll get 1 hour together on a call. We can talk about any financial topic that you wish, once it's within our expertise, of course. And I can help you. So with leverage, I can give you something now. I actually did a video about margin 3 years ago. Let me find that video for you. I'll just show you the thumbnail so you can check it out. So 1 second. All right, so I'm going to share my screen again. So we did a session. So I'm going to go oldest, right? This is our YouTube channel. We did a session on margin. This was when we were engaging finance Twitter a lot. So I met some guys overseas and they came on our platform. So we had an interview with Brian Feraldi. Brian just got to, I think, 100,000 subs on YouTube. His channel has been doing great. We interviewed him 3 years ago, and we did this session on using margin and debt to invest. So check this out, Tavares. Check it out first. If it helps you, great. If you need more help, just reach out to me. Can have a one-on-one session. We also did this one called Common Sense Investing with Nick Green. That was his name, right? So if you go to our channel, sort by oldest, you'll find some more older videos. These are still good videos to watch years later. We did budgeting guide with Jillian Jackson. We did how to research, how to pick stocks, how to use financial ratios. We have a lot of great content. We have how to protect your investments by writing a will. We did a lot of. We've done over 400 videos, guys. So a lot that you can check out. And so yeah. Final check for questions. Let me see. So Sania, I hope I helped you. Only natural products. Are you asking about the cost? Oh, the cost for one-on-one consultation. The current price is $15,000, but I just encourage you to check the website in case you're watching this in the future. The price may not be the same, but it's $15,000 for an hour, or 100 US if you're overseas for 1 hour, and we cover any topic, right? I'm gonna share the website in the chat now, learngrowinvestclub.com. Let me share that over here as well. So Colin, we're actually going to be talking about creating a trust at our conference. All right, so Colin is asking about creating a trust. We're going to talk about that at our conference, right? Because there's a topic we'll be covering about how to protect your wealth, right? A trust is one such thing. We're going to talk about that, all right? So only natural products. I hope that helps you. Let me see here. So for those who need the website, learngrowinvestclub.com. Let me share the conference website, since the conference is our official sponsor for this episode. All right, so let me share that on the screen. And I'll tell you, last year, we had just an amazing time. If you missed last year's conference, let me show you how you can access that. If you go to Buy It Now on our website, you'll get access to Grow Your Wealth 2022, Grow Your Wealth 2023. So when you buy them together, so it's $40 for one, $50 for the next. We sell both for $75. So you get $15 off to own them both. And as I said, for Grow Your Wealth 2023, you have all of these topics to cover. I think it's like 12 videos. And for 2022, we had 14 sessions. So you're getting 20 sessions for $75. Again, that's way, way undervalued, right? So get it while you can at the price that it's currently at, because it may change, right? All right, so quick check over IG. Okay, awesome. Only natural products. Great. All right, guys. So thank you for joining me tonight. This was fun again. next week. I don't know what I'll talk about yet, but we'll see. So it's Friday streams from now on. I'm not sure of the time, sometime between 7 and 8. So subscribe to the channel, follow us on IG, follow us on LinkedIn. You'll see when we go live. If you turn on notifications on YouTube, you'll know when we're going live. And of course, if you don't catch me live, watch the replay. But I really appreciate you guys being here. Thanks for all the questions. Thanks for the participation. If you did not say anything in the comments, at least you can like the video, and that will help us out a great deal. I'll see you again very soon.
The Grow Your Wealth Conference is almost here. If you're a seasoned or aspiring entrepreneur ready to elevate your business and personal finances by learning from experienced, impactful, world-class entrepreneurs, then this conference is for you. Grow Your Wealth is happening over 2 days in Kingston, Jamaica, with unique speakers, business networking opportunities, actionable teachings, a business pitch competition, and access to an engaged community. So save the date and get your tickets now. Tickets and more information are available at learngrowinvestconference.com.